Nikhil Khandelwal, who's Managing Director of Systematix Shares and Stocks, joins in to talk more about how the markets are positioned right now. Nikhil, good to have you on the show. How are you looking at your market positioning in the current volatility?
Well, good morning. Well, markets for us are in a phase of time-wise correction, and we have already seen the market taking the brunt of strengthening of dollar, almost close to about 14% year to date. The oil price, which have also strengthened over the last 4 to 5 months, and clearly a major event in terms of a systematically NBFC defaulting to its lenders. So the markets, especially the long-term investors, especially the foreign investors, have lost a little bit of lost a lot of money in currency devaluation, as well as lost a lot of faith in our regulatory environment. So I think it is going to take some time before the damage is repaired. At the same time, we had also seen several excesses in valuation across most of the growth sectors, which have also begun to correct over a course of last 45 to 60 days or so. I think a combination of these factors points to a time-wise correction, wherein coupled with the political events around the elections and strengthening interest rates over the next 3 to 6 months, we believe that the market will try to find its feet, which may be around the current levels. So from a market position perspective, we are fairly cautious over the next 3 to 6 months, because there are several events which have already occurred, or we are transitioning through, or are going to we have to face head on over the next 3 to 6 months, which are going to keep markets in check. However, as in the case of any markets which make highs where you make excesses, the market has also seen a very sharp correction of close to about 13 to 14% in a matter of 35 to 40 days. So from a recommendation standpoint, now we are seeing several opportunities as well in the market, and possibly there's a time to kind of look at sharply on those opportunities while continuing to stay away from the excesses.
And Nikhil, that's exactly what I wanted to talk about, whether or not you've been a buyer in this decline, and if that be the case, what is of interest to you? Where do you see value as well as growth combo emerging?
Right. No, I think there are several areas wherein we are seeing a lot of green shoots in terms of value as well as growth combination playing very, very nicely. Within one of the areas which we like a lot is the whole consumer play. Within the consumer, across autos, across consumer discretionaries, as well as retail, are three areas where we are seeing growth versus value emerging in some of the finest names across these industries. In the auto side, we believe among the large cap four-wheelers, we believe that Maruti and Ashok Leyland are at levels which are one of the most attractive levels, considering the close to about 15 to 18% CAGR earnings growth, which we expect in these two companies over the next 2 to 3 years. On the ancillary side, we believe that Amara Raja is one of the best placed names in terms of the domestic auto ancillary growth, with close to about 20-25% earnings growth over the next 2 to 3 years. While a mix of domestic and international growth can be played through Bharat Forge, which also we believe will show close to about 18 to 20% earnings CAGR over the next 2 to 3 years. So auto is a pack where some of the finest names are now available anywhere from between 15 times to 25 times forward earnings, and all these names were trading for almost 5 to 7 years at about 35 to 45 times earnings. So definitely value is coming in this pack, and these are some of the finest names to own in your portfolio. Within the consumer discretionary space as well, we are seeing companies which would show consistently about 20 to 25% earnings growth and are fairly attractively valued. In the electrical consumption space, we like Orient Electric. On the dairy side, we like Parag Dairy, and on the coffee and the tea side, we like a company called Tata Global Beverages. And all of these companies are trading somewhere between 15 to 20 times forward earnings, with close to 20-25% earnings CAGR without any major risk to their earnings. So these are definitely two spaces which you definitely should own in your portfolio, and you may never get these stocks at these levels in the next 2 to 3 years. Another area which we like a lot is on the export driven businesses, is companies which have very strong balance sheets, have very strong customer base, a very long term contract with customers, and are catering to markets where they are seeing a kind of a tailwind of the currency devaluation as well. And within the space, while IT remains a consistently growth pocket, but we believe in IT the sectoral valuations have hardened significantly, and we at our end like textiles and chemicals as two major areas where I still believe that value is available for the kind of growth which these companies will provide. And within the textile space, we like two companies. One is Wellspun India, which is a market leader in the terry towels space, and a company called KPR Mills, which is a market leader in export of handmade garments. So these two companies within the textile space, in our view, would benefit the most from the global market demand picking up, the currency devaluation which has happened, as well as a very strong balance sheet to carry forward with them. On the chemical space as well, we are finding several pockets of growth, but within that we believe a company by the Gujarat Fluorochemical, which is one of the leading players in the fluorochemical product space, would be the most attractively placed as far as the valuation versus the growth which these companies offer. In our view, the whole textiles as well as this chemical plays, these three stocks would give close to about 20-25% earnings CAGR over the next 2 to 3 years, and are possibly available at anywhere between 8 times to 15 times forward earnings. So you don't get earnings such kind of valuation in these kind of growth stocks, and these are right opportunities to add on to your portfolio.
Okay, we leave it at that, Nikhil. Thanks very much for joining in and discussing with us your investment ideas and your investment themes.
Thank you.